So good morning, everyone, and thanks for joining on Saturday morning call for this 11th session of Niveshakon se Samvaad. This platform is meant for the value addition to all our esteemed customers, and it related to all the important topics which are related to the financial markets. As the name suggests, Samvaad, there is going to be a both-way interaction, both-way dialogue. Today's topic is India's consumption growth story. So when we say consumption growth story, and if we look at the India, so India having reached the landmark of becoming the fifth largest economy in the world and is on the march to reach the $5 trillion milestone by FY27. So this march will require at least 13 to 14% growth in the nominal terms or 9-10% in the USD. While there are several drivers to the growth, the core strength within the India lies in its population, which is around 1.4 billion. And it's, of course, demographics. India has a relatively young population with 26% below 14 years and 67% between 15 to 64 years. In comparison to the developed world, I mean, if you look at the US, which is 17% over 65 years, and if you take Europe, which is over 21%. This core strength is the backbone behind the resilience and the growth of India's demand. India's consumers' demand for goods and service will remain robust for not just the next decade, but for the next few decades. And to discuss this, today we have the veteran of the industry, none other than Mr. Manoj Menon. So welcome, Manoj.
Thank you, Amit. Wonderful. Good morning to everyone.
Yes, absolutely. So just this is my honor to introduce Mr. Manoj Menon. So he's a head of research and consumer analyst at ICICI Securities. He's rated by institutional investors across the world as India's #1 consumer analyst, and which was the survey over the last 2 years. He started his career with Hindustan Unilever in commercial function. First role as a manager, investor relations, which is a bird eyes view, and the second role as a commercial manager for Himachal factory, provided a warm world view. Over a career spanning 20 years, he has had analyst and leadership roles at Kotak Institutional Equities and Deutsche Bank. He's a rank holder in commerce from Calicut University, a cost and management accountant, and MBA from FMS Delhi. An avid Australian cricket fan and a self-proclaimed consumer analyst for life, Manoj lives in Mumbai with his wife Reshmi, who is an aspiring chef, and 3 boys and 4 daughters. So Manoj, so nice of you to have on this session. All floor is yours. We are really eager to hear you.
Thank you so much, Amit. In fact, some of the opening remarks, what you said is actually the presentation, right? So I really don't think there's nothing much for me to cover. Okay, so guys, on a serious note, what we'll actually cover today would be mostly, on the consumption side minus financials. So I wouldn't be talking about the financial part of consumption, let's say whether it's a home loans or personal loans or insurance or all that. We limit largely to the long-term trends, what we see in the consumer goods space specifically, and some of the medium-term trends. And being a stock market person, I can't really present anything without actually giving a stock market lens as well towards the end of the presentation. And at any point in time, Amit, I'm okay to take questions, and I leave it to you, in terms of covering the Q&A, whether you want me to present for 30 minutes and then do the Q&A or vice versa. I'm open to both options.
Yeah. So I request you present for first 30 minutes, 25-30, and then I request all the participants, whatever your questions are, please post it in a Q&A session.
Absolutely.
Okay. Yeah.
So actually, the first 10-15 slides is actually the summary which Amit anyway gave you, in terms of, let's say, where India is, on an absolute basis and also on a relative basis. Basically, what this first slide essentially talks about the fact that India is essentially a consumption-driven story and not a manufacturing-driven story as yet, right? So I'm happy to share the presentation, Amit, if any participant would want it later. So what we're essentially saying is the private consumption in India over the long term has always remained close to that 60% mark. The important point to note is, in long term, you would appreciate that, different parts of the economy would have performed differently, right? So, for example, you had periods of, let's say, in the last few years, the perception is that, okay, there is a lot of industrial recovery which is kind of happened and continue to happen, etc. But fact of the matter is that, for the consumption economy is still 56%, broadly speaking. And essentially, the message here is that even if we are looking at, let's say, manufacturing the renaissance sort of situation over the next decade, Suffice to say that the trickle-down effect essentially would mean that consumption is also growing somewhat at similar paces is a fair assumption to make. Yeah. So one nuance here I want to add, when we talk about consumption, broadly, we classify this as consumer staples, which is FMCG, the daily use products, and the discretionary products, right? Discretionary include services, for example, watching a movie or buying a jewelry or buying a footwear, So the simple point what we are trying to hit here is that the headroom for discretionary growth consumption in India is far higher than FMCG, right? Versus most of the markets. I know that evolved markets like UK, US, etc., are not necessarily the right benchmark for India. But the fact of the matter is that at some point in time, when eventually India becomes far richer than today, discretionary will continue to outperform staples. The retail industry includes both, which is grocery, retail, and also the discretionary aspect. As Amit mentioned a little earlier, the retail industry has grown, just about in double digits. Also, remember that when we talk about retail industry, there is an inbuilt inflation which actually gets modeled in it, right? So, for example, let's say in the last 10 years, the world has seen moderate inflation. Last 2 years, we have actually seen significantly higher inflation. And if the world view is of, let's say, higher commodity prices going into this decade for a multitude of reasons, right? I mean, so the fact of the matter is that given that inflation is inbuilt into the retail growth per se, the possibility of retail growth accelerating, or rather, which has already happened in the last couple of years, sustaining into next 10 years, is also fairly high. Just a flavor of the segment-wise share of retailing industry in India. Actually, you can go to the next one, actually, which is a chart. Yeah, so there is food and grocery, apparel, footwear, furniture, pharmacy, consumer durables, books and music, and others. Look, I think the overall growth, while it comes to low teens, 13-14%, that's the forecast. The basic message here is, if you look at food and grocery, which grows somewhat lower than the overall growth, books and music is probably the only one, which is actually likely to underperform, given the, the digitization which has actually happened. And also, you'd appreciate that anything which is, which is, let's say, productivity improvement is actually deflationary, right? I mean, so let's say when you're buying a book earlier in the physical format versus the e-format, the cost of production actually comes down, which essentially would mean that it is deflationary in the long term. So, except for books and music, most of the categories are actually likely to grow closer to the 13-14% or higher. And in fact, food and grocery having a high weightage, so the 13-14 actually could look far higher. Or rather, the food and grocery is actually pulling down the overall growth 13-14, so I would say. Most of the other discretionary categories are expected to grow in high teens. Yeah, so we covered this. Okay, so if you look at the drivers of consumption, in general, obviously it starts with income growth. In fact, I would go one step even lower, right? So we are one of the few countries in the world where we actually have close to 1% of population growth, right? So any business without doing anything should be growing at least at 1%. Right, so you start with population growth, then there is obviously income growth, then urbanization, and we'll explain why urbanization matters for different categories. Why one, let's say, women participation in workforce, for example, why it matters. Anyway, so it's basically population growth, income growth, urbanization, favorable demographics. We'll touch base on that. What does millennials mean for the consumption economy, and tech and innovation, and also change in consumer attitudes. I'll take a pit stop here on the force 5, which is the change in consumer attitudes. To give you an example, let's say take chocolates as a category, right? Now, Australia is a country of, let's say, 30 million population. Now, if all of India, right, behaves like Australian chocolate consumption population or Australian behavior in terms of chocolate consumption, the market in India could be as high as 10x versus today. Now, basically, what I'm trying to say is that it's really not just income only. It is also the consumer attitude towards, let's say, category in terms of habits. Now, the reason, since we consume a lot of, let's say, milk-based sweets, and otherwise also, anyway, Indians has got a sweet tooth. A lot of sugar consumption which happens in different form. Just by looking at income and comparing other countries and say, oh, the category should be this bigger, etc., really not going to work, right? So we need to nuance that with the cultural aspects of our country. Or I'll tell you another example. The consumption of toothpaste in India is very low, right? So let's say Colgate comes and tells us that, look, the opportunity, the headroom is significant. Look at Brazil, for example, kind of, the per capita consumption is like, let's say, 4x of India. Now, but the cultural nuance is that in India, less than 5% of population actually brushes twice a day. right? Whereas in Brazil, what I understand is, the consumer behavior is such that they actually, brush probably like 3 or 4 times a day, practically after every meal. Now, it's a cultural aspect. Let's say if I don't pick up twice brushing, it's very unlikely that my kids actually would, also follow that, right? So what I'm saying is that some of these opportunities on paper exist, but you need to always nuance that with how Indians behave. Okay, I'm sure you would have seen these sort of slides many times in the past, but the summary view here is that, in the medium to long term, basically the high income and the upper, mid income growth, which is significant, which will open up even better opportunities for discretionary consumption. Linking back to the top-down comment we had earlier. Similar one, actually, basically the top end, which is elite and affluent, which typically consumes far higher. And also one aspect I want to highlight here, in the last few years, 5, 6, 7 years, or maybe this last decade, one trend we have observed in terms of consumption companies' behavior in general, whether it is a Unilever or whether it is a Titan, or you can actually look at different baskets out there. One common thread what I've observed is that most companies have deployed their incremental dollar largely to drive premiumization. To give you an example, let's say most of us would know brands like, let's say, Wheel or a Ghadi or a Fair and Lovely, etc., Breeze soap, etc., right? Think of it, when was the last time any company attempted to even create something for the masses, right? I'm not saying there is no bottom of the pyramid opportunity, but the company's behavior says that they are all truly believers in the the affluent story, and everyone really wants to target the profit pool which lies in the mid and the top, not really at the bottom of the pyramid. Yeah, so we spoke about the urbanization opportunity. India is, just around 2/3 urbanized, whereas China is like 60% and US is 80%, etc. So, look, urbanization essentially would mean that convenience becomes even a bigger factor for consumers, right? Why? Because in urban areas, obviously, you spend a lot of time on travel. You actually have a much faster pace of life, etc. So, any category or any business which has got convenience as a vector, right, is likely to outperform. One example is, we are firm believers that, let's say, packaged foods would be far bigger in the next 10 years, or will have an accelerated growth in the next 10 years versus the last 10. Yeah. So again, millennials, anyone born, post 1980, till, let's say, the late 90s, right? So, in India, that part of the population is high, and it is expected to be, even far higher in the next few years. And to that extent, any business strategy which any company is making currently need to be cognizant of the same thing. So the proportion of millennials expected to increase, from the current levels to close to 80%. Okay, so one aspect about India which is interesting. This is from a Nielsen survey globally. So basically, the only number you need to see is the top one, that 35, 24, 51, 46. So see, one is to have the affluence. The second is the willingness to spend, right? So basically, in India, only 14% doesn't have the confidence to spend. 86% actually kind of is happy to spend, actually. So, and that augurs well for consumption in general. And I have seen this on a time series basis, even during Lehman times, even during the taper tantrum in 13, 14, etc. While as a country, as globe has gone through different cycles, the consumer confidence levels in India has largely remained high, which essentially would mean that, the only call we need to take is what happens to GDP growth, what happens to affluence increase, etc. If that actually happens at a faster pace, the willingness to spend absolutely is there. Ability to spend, obviously, you need the tailwind of, actual disposable income growth. Yeah, so opportunity, again, I'm not comparing India per capita consumption with, let's say, developed markets, etc., because obviously those are all evolved markets. But even if you compare this with our neighbors like Indonesia or a China or a Philippines, kind of, so which are all at, let's say, where India is currently, let's say, a decade or 20 years back. So these are not faraway countries. These are not culturally too different, I would say. Ultimately, it comes under the Asian basket. The opportunity, the headroom for India in general is 2x, 4x, and 5x comparing with these countries, not even going into the far affluent countries in the West. And on the penetration aspect, which you can actually see on the right side, there is significant scope to drive it. The only question which I kind of pose to most consumer CEOs, which I've been doing for a while now, is that maybe the actions or activities by the companies to drive penetration appears to be underwhelming, because everyone wants to focus on the premium segments and not necessarily drive the bottom of the pyramid nth consumer, consuming that volume. I'm not saying companies are not focusing on volume, but the disproportionate effort is actually towards premiumization and not necessarily driving penetration. Opportunity exists, but I think companies needs to harvest it. So just a cut in terms of different categories, what is likely to drive growth. So if you look at, let's say, food, essentially, it's actually one of the largest categories we mentioned a little earlier. The new categories, which is healthy and organic, is likely to contribute to 1/3 of the incremental growth. Whereas, let's say, when it comes to health and fitness, it is essentially what is already there. Then the more consumption is likely to drive 90% of the growth actually. So that's the way to read this. Now, coming to little short term. So the long term story is there. And as I said, it depends on the strategy of different companies. At this point, it appears underwhelming. So obviously, there needs to be some strategy shift which need to happen for India to realize the full potential in terms of volume growth. Coming to the short term, see, while people blame COVID as a disruption for growth, etc., it is important to appreciate that, before COVID, there was GST, which was somewhat disruptive for some parts of businesses. There was demonetization, which also put brakes to the growth for a very short period of time, etc. The fact of the matter is, even pre-COVID, there was actually a slowdown witnessed. Then there was obviously V-shaped recovery, which is optical. After that, one big change you'll find, the volume versus value. If you look at the period between 18 to, let's say, 20, right, you will actually find hardly any price growth, right? The top part of it. But suddenly post-COVID, given the inflation, given the, let's say, the Russia-Ukraine war, which resulted in, let's say, crude oil prices going up significantly from, let's say, 50 to 100, etc. And obviously, India being a net importer, it is actually imported inflation we had to contend with. The limited point here is that the price growth has suddenly come back. Now, the worldview currently is that price growth will sustain into the medium term, given where, let's say, US bond deals are, they currently, given the worldview on commodities in general, which is a big shift versus last 10 years. The other aspect, in India, this is from an FMCG or a consumer staples lens. More than 30% of all of FMCG products are sold in price pointed packs, which is 1, 2, 5, and 10. And obviously, when there is inflation, the only way to manage gross profits for any company is to actually reduce grammage. So you have actually seen a biscuit grammage coming off from 80 to 70, or a washing powder from 125 to 96, or a chocolate from close to 30 grams to 20 grams, etc. Right? So there's been a 30% price increase, which we've actually seen in terms of the grammage reduction. And one lighter aspect I just want to highlight, actually could go back. When a consumer buys, say, a 5 rupee or a 10 rupee biscuit pack earlier, the consumer is not really counting the number of biscuits, but consumers intuitively knows, what he consumed yesterday and what he's consuming today when the grammage reduces, right? Or rather, the number of biscuits reduces. What companies have done smartly over a period of time is, let's say, if you pick up a 5 rupee Good Day, the size of the biscuit is actually smaller today versus what. So they don't really cut the number of biscuits anymore. They've actually used a different die, to make the product, but keeping the count to the same, but the size has been reduced. One aspect to highlight here, this just about the COVID disruption and where we are sitting today, and this may look differently in a year or two, but as it stands today, most of the discretionary consumption significantly outperformed FMCG in the last 3 years, which is fiscal 19 to fiscal 23. Of course, we have started to see some cyclical slowdown, deceleration in discretionary also. So, but having said that, the story here in this chart is the last 3 years actually belonged to discretionary and not consumer staples. Whereas in the next couple of years, our hypothesis is that, if there is some sort of stability in commodity prices, or if there is any correction in input costs, I think FMCG will make a comeback versus discretionary. Yeah. So, what we've seen in the last couple of years is, some of the excess consumption reset, down trading is actually happening. In my career, for example, this is the first time I'm actually witnessing material down trading. Because the last time significant down trading actually happened way back in 2001, 2, 3. Again, similar contours at that point in time. Let's say, for example, mobile adoption happened because at a household level, you have to find money to spend on mobiles. It was also an era of somewhat higher EMIs, etc. So obviously, at the end of the day, there has to be a household budget balancing requirement. Somewhat similar here. So we currently see inflation plus, let's say, interest rate hikes, etc., actually resulting in down trading. But one observation, in this cycle versus the previous cycles is that when we say down trading, what essentially is that, take the case of, let's say, detergents category. You have a surf at the top end, you have a rin in the middle segment, and let's say you have a wheel in the mass market. Historically, what we observed is when we talk about down trading, consumers moving from, let's say, surf to rin, or a rin consumer moving from rin to wheel. What we're observing this time across categories is that consumers who already, let's say, have sampled or tasted the premium brand is actually staying with the brand, but buying a lower unit price pack of the same premium brand. So essentially what we're seeing is pack size down trading and not really brand down trading, which actually tells you that possibly the aspiration levels, irrespective of income, is far, far higher today. Whether it is to be linked to let's say, the proportion of millennials in the economy, etc., is conjecture. But the fact of the matter is that, any improvement in affluence will significantly, kind of flow through, into consumption. That's a moral of the story here, because consumers is still wanting to consume the premium product, but I just don't have the money. So I actually, I used to buy a 50 rupee surf. Today I'm buying a, 2 packs or 3 packs of 10 rupee. But once actually inflation cools off and once I have some leeway to spend, I'm likely to go back to my normal consumption trajectory. That's what the message here. Okay, so I want to just highlight one aspect which is a bit macro. So basically, what we are essentially saying here is that when it comes to FMCG, rural markets is important from an incremental volume driver. What we have observed is that, basically the way to read these two charts is basically this is what you see as the dark line and the gray line. Basically the gray line is the rural inflation. The darker line is actually the rural wage growth. Now, during the era of, let's say, 2008-9 to 13-14, you'll actually find that the rural wage growth significantly outpaced rural inflation. That's on the top chart. If you come to the bottom chart, I've added one more line, which is essentially Hindustan Unilever's volume growth, right? And the why HUL's volume growth? Because HUL happens to be the largest company at 60,000 crores revenue and most exposed to rural of all FMCG companies or all consumption companies in India. So if you will actually find that, look at the volume growth, right? In that era, which used to be double digits comfortably, then after that, we're not really seen double digit growth except for, base effect, etc. The limited point, what I'm saying is that the era of higher minimum support prices, the era of agri-inflation, the era of, let's say, in those days, the incremental spends on the Mahatma Gandhi, employment guarantee scheme, etc. Rural affluence has actually resulted in FMCG companies significantly growing in volume. That's really not the case, over the last decade or so. And we really don't think this template is changing from a policy point of view. Yeah, so some of the other trends, what we see is, very rarely you'll actually find the consolidation and formalization happening at the same time. So formalization essentially would mean unorganized to organized. Consolidation essentially would mean even within organized, the larger companies becomes larger, right? So for example, in the last decade, in the listed space at least, or even in the unlisted space, which is maybe a Mondelez or a Nivea or a L'Oreal kind of. So the what we observed is, the most companies have actually gained market share. So you actually, let's say GST or a demand drove formalization, which means the organized industry grew faster. Even within the organized industry, the larger ones became even larger. Okay, so few long-term trends, what we strongly believe in. We do believe that this decade belongs to mergers and acquisitions. We do believe that you will find significant M&A activity by most of the large companies. And the reason I say this because if you actually take consumer staples in India, which works on negative working capital, you really don't need a balance sheet to grow, right? So your ad spends goes through your P&L. Your business is anyway negative working capital. You need some money for your capex, etc., which largely gets funded by improvement in working capital. So it's a beautiful business actually. But I am of the opinion that, after looking at, let's say, some of the global trends which happened like 30, 40 years back, etc., India is at a stage where, given the paucity of growth, or rather given that, let's say, HUL today grows at 5%, but their ambition is to grow, higher than that. I think M&A, will be an important driver of growth. And also the context to appreciate is, there is an investment winter when it comes to startups, etc., which also would mean that there will be more opportunities to buy at the price which the larger companies would desire. Just a pit stop on e-grocery, which is your Dunzo and Zepto and Instamart, etc. The limited point what we're basically trying to say is, actually could go to the next one, actually saying that, look, if you look at multiple categories in India, whether it is hair care or baby foods or toothpaste or most categories actually, the Herfen Hirschman index or HH index basically, is very high in India. So what I'm essentially trying to say here is, in most of the consumption categories in India, the top 3-4 players would account for 70-80% of market share, which essentially would mean that in things like, let's say, Zepto or e-commerce, etc., the opportunity for even further market share gains exists, because let's say if you take the Zepto model or Instamart model, which is the dark store closer to your home. Now that model works only because you actually have, let's say, 100 200 square feet, a small store, which means there is a paucity of space, which means you only can stock up 1 or 2 or 3 brands in every category, right? So, and if you have a situation where in most categories the top 3 players are 80%, you need to have those products, which means even further market share gains and not fragmentation. So this is a stock just slowly easing into the stock market lens. But in a lighter way, what we have observed is in many companies, when the new CEO comes, so there's a lot of excitement, and there has been some significant turnarounds also we have actually observed. So just again easing into the stock market part of it, just a couple of case studies we'll just call out on, let's say, what markets like or markets love. One is volume outperformance. Second is expansion in new segments. Now, what I mean by expansion in new segments is, if you look at FMCG, typically most of the FMCG companies are valued on discounted cash flow model, which essentially saying that, look, if there is one unit you're selling to one consumer today, unless you lose market share, it's a fair assumption that you have that consumer for life, right? So when a company adds a new segment, it is actually value accretive. Obviously, we need to be kind of, let's say, convinced as market or market participants or analysts, as investors, that yes, this new segment is something which is durable. If the company is able to convince us that or demonstrate that, it does result in the actual value of the business going up. So one was the volume outperformance. What I was trying to say, there was a period between 18 and 19 when Nestle actually grew double digits, where most companies were, let's say, struggling to grow volumes. The stock actually went up 50%, even though profit growth was lacking at that period of time, like similar to right now, where milk inflation has dented the gross profits, but volume outperformance happened. And for the same logic, what I said, right, in an FMCG company, when you add one unit extra, that one unit remains with you for the lifetime of that consumer. Even though profit may not come for 1 year, but that's fine. Yeah, move on. The other one is on Marico, where Marico actually implemented the Saffola Foods umbrella branding strategy right at the middle of COVID, and it seriously resulted in a re-rating, where at a point in time it was actually trading at similar valuations to even Unilever. And in Britannia, Varun Berry used to talk about a new category creation, and of course he had a certain amount of high credibility in that time, turning around the company post the Vinita Bali era, etc. So that credibility essentially would mean that even comments by the company that, oh, we are entering newer categories, actually used to drive stock performance. A couple of other trends at a sectoral level, which is the D2C brands and the war for talent, etc., which I believe, yes, it is far better than what it was, let's say, earlier. But the point to note here is, it is still a long-term issue in our opinion. I think one aspect, where we have a contrarian view versus consensus is that, let's say, consensus currently believes that there is a pressure in terms of funding, so D2C companies have taken a break, etc., etc. Look, the fact of the matter is that I'm a firm believer that we are living in an era where there has been a democratization of marketing insights, which essentially would mean that any marketer with, let's say, 10, 15, 20 years experience, it's not difficult to find a niche and ramp it up to, let's say, 5 million, 10 million revenue. Now, the question is, obviously, how can you scale up, right? But the fact of the matter is that, identifying a niche, because there is data available, let's say Google Insights, for example, right? I mean, kind of, or if you go to Facebook, they will give you, enough of those to support your thesis. Limited point here is that, from a larger company point of view, this trend is actually a headwind over the long term. Yes, there will be cycles like these where, because there is an investment winter, they'll be able to do M&As. A couple of other aspects about the markets, and we kind of open it up for Q&A. So what we are essentially saying is that, given that the consumption valuations are very high in India, what happens is, take the case of HUL and Unilever. Now, HUL, Hindustan Unilever, accounts for about 12% of Unilever's consolidated global profits, but it actually accounts for 34% of Unilever's market cap. because Unilever PLC trades at, let's say, a price earnings multiple of 20, whereas Hindustan Unilever trades at 50. Now, why we believe it matters is because if you're, let's say, a Unilever PLC investor, a global investor, now, and if you think about the fact that the subsidiary is valued, appropriately, which is the Indian valuation, you'll actually find that this 20 PE which you're paying for Unilever PLC, and if you exclude the Hindustan Unilever valuation there, suddenly you believe that, look, you are getting the rest of the businesses at, like, let's say, 12, 13 P. And for many of these global companies where there is no identifiable promoter, it's extremely important to have this sort of situation, which gives significant downside protection to your stock, right? So in fact, we have been advising many of the unlisted companies in India, multinational subsidiaries, that, look, if you actually list, this is the likely outcome. So if you take Mondelez, for example, the erstwhile Cadbury, India accounts for 4% of profits. But hypothetically, from a scenario point of view, if Mondelez listed in India, it will account for 12% of the global market cap. Is the thing. This essentially what we're trying to say here is, everything is overvalued. It is just that the overvaluation has kind of, let's say, got better over the last, let's say, 6 months or so, but it is still overvalued. I don't think there's any aspect there. So we cover about 35, 40 consumer companies. So what we have in this slide and the next one is basically our summary view on each of those, and we are at the end of the presentation. Thank you so much.
Sure. So I think thanks, Manoj. I think wonderful, very crisp session. I mean, as a layman also, though not related to, say, research analyst, but there are so many insights. So as this platform suggests, of course, we are not going to speak on any particular stocks. Dr. Pradeep Kakkad has raised his hand. Yes, sir, I think you will get this presentation after 8 days on your email, and this will get posted on our social media platform, YouTube channel as well. I request all the participants to post any of your questions in the Q&A sessions. There are a couple of questions via email or over the WhatsApp. First is, in your one of the slides you mentioned, Manoj, that price growth will sustain, which is a world view. But considering the inflation problem, how much is the possibility of that? Any threat of the inflation? Yeah.
See, inflation is an opportunity and a threat both. Because what happens is during times of inflation, the marginal players struggles. Like, again, take the case of the detergents industry, right? It's not a very high R&D industry. It's not very difficult to actually produce a detergent or a soap. It's not difficult. It's a very low entry barrier business. I'm not talking about the premium detergents with enzymes, etc. I'm talking about basic soda ash based products, right? I mean, which still account for 2/3 of volume consumption in India. So what happens is that during times of inflation, the players which largely sell their products based on price, right, or discounts, they actually struggle, because let's say times in which inputs prices goes up, let's say 50%, right? They have finite working capital. And why finite working capital? Because they've only so much of collateral which they can actually give it to a bank and take a loan, right? And obviously that you cannot increase by 50%. So your ability to manage your, let's say, 100 units of volume suffers actually, right? So you're able to operate only at 70%, right? But there is a consumption opportunity at 100. So what happens to the balance 30, right? So the larger players, have got an inherent advantage actually from a volume market share point of view in times like this. Now that is from an industry lens. Now from a consumption lens, of course, when edible oil prices, for example, went up 2x last year. Look, end of the day, however rich you may be, however poor you may be, there is a certain quantum of inelastic edible oil you need. Let's say salt, for example, is a category where, however rich or however poor you are, you can only consume so much. You may premiumize, right? Which is actually inelastic. You actually need a certain quantum. So which means when edible oil prices went from 100 to 200 per liter, now end of the day, the housewife, or the homemaker actually has to balance the budget, which has to result in lower volume. So what I'm saying is inflation is good at an industry level, but if your employees are growing at like 8%, your rentals are probably growing at like 5%, right? So essentially from a line item point of view, you actually get operating leverage. Your profits actually grow faster because of your revenue growth.
Whether ChatGPT is going to influence this consumer story or any impact? Out of box question.
Not my domain. That's a tech question. So I really wouldn't want to, no, I have no view. Sorry.
Okay. Any view on the wood panel industry, please?
No, my colleague Arun covers it again. So I said I cover the staples and discretionary part of it, but not no.
Sure.
Only one aspect which I've heard, I didn't talk about it, is again that it is a significant formalization story, unorganized, organized. And second, given where we are in the real estate cycle, right? He's a believer that yes, this cycle looks extremely promising over the next 3 years. And I cover paints also. Then I can tell you, from that, yes, we are finding that even the paints industry, so all these industries, obviously, when you buy a home, you need a paint and you need a wood panel and you need a waterproofing, etc. Right? I think it goes in unison. So suffice to say that at this point in time, I think most of these businesses have got inherent tailwinds.
So next question, of course, is related to this. Please, can you, sir, guide us on the consumer staple view on the consumer staples?
Consumer staple. If I heard correctly, you said consumer staples view.
Yeah, view on the consumer staples.
Yeah, so look, see, India, obviously, we discussed a little earlier that it's always a long-term opportunity, right? I don't think there is any dearth of opportunity. It's a question that are the companies having the right strategy to harness that opportunity, right? That's been the question over a long period of time. But if I take a 12 months, 24 months view, we are of the opinion that if there is any stability in commodity prices, or if there is any correction in commodity prices, both the scenarios, the consumer staples businesses should significantly outperform discretionary at this point in time, because their ability to pass on those benefits and drive that nth volume consumption. And I told you an example of, let's say, pack size downtrading versus brand downtrading. That insight gives us a lot of confidence that, it's just a question of, improvement in income levels or disposable income. And if that happens because of, let's say, lower inflation, if at all, right, you'll actually see significant volume uptick there.
Sure. Thanks. Mr. Kumar Shah is asking, how is the current global scenario, like leading US banks collapse and more to follow, expect to impact the consumption story of India? Will it expand or shrink the spending pattern or taste of the Indian consumers?
See, I really don't think there will be any direct impact, because India is very much a domestic consumption story, right? I mean, so to that, I say, for example, let's say take the case of China, right, which is actually an export-oriented country, right? Or for example, let's say if US goes into a recession, let's say hypothetically, right? I mean, there will be impact, for those countries, let's say like a Bangladesh, right? I mean, which is a significant export-oriented, or export-dependent, sort of a country. Now, India, given the fact that we are largely a domestic, story, the problems which happens elsewhere will have far lower impact. I can't say no impact. For example, let's say, if US banks or US financial industry is to reduce spending on tech, of course, there will be some impact on the large tech companies, which are large employers, let's say, in the top 5 cities, right? Your Bangalore or Hyderabad, which essentially again will, spill over into some of the discretionary consumption, for example. So you can't say no impact, but, if that is a worldview that, okay, there's going to be serious issues in US, if that's a worldview you have, expect some marginal impact on some of those categories in those cities.
Okay, got it. Mr. Shakti Nagri, consumption story. Why MNC theme lost its glory in the last 3 years? Please throw some light on the MNC theme for next 5 to 10 years, please.
I think 2 things has happened. The MNC theme has kind of lost a bit of a sheen for a couple of reasons. One is that Indian companies have started executing better. Let's say if you look at a Dabur or a Godrej or a Marico, or a Britannia, right? I mean, versus let's say, a Lever or a Colgate, etc., or a Nestle. I'm not saying they're doing badly, but it's just that, the other companies, have executed well. Another aspect to also appreciate here is that many of the Indian companies are now reasonably large. 10,000 crores, 15,000 crores, revenue, etc. And you'll agree with me that size begets scale, right? So your ability to behave in a particular way in the market is far different when you're at 15,000 crore revenue versus 5,000 crore revenue or 500 crores revenue, right? So that's one aspect. Second aspect also is that, we do believe that, many of the multinational companies are far more, let's say, globalized versus or linked to the strategy of the parent versus, let's say, the ability to operate as an Indian company. And it's got its implications, actually. For example, in some of these MNCs, what has really happened is most of the functions, whether it is, let's say, finance or marketing or HR or, many of these functions at a country level actually report to the functional boss in the region. Remember, not to the CEO in India. So what practically has happened in many of these companies is that, the Indian outfit, sales is local. So your CEO actually is kind of, technically, I can use the word in a harsh way, if I can say, is actually head of sales. The other functions reports dotted line. So, and that has got implications actually, because when you do certain strategies for the region and consider India as a country, because I'm a firm believer that India is not a country. India is a continent. India is far bigger than a country actually, right? And you need nuanced strategy, let's say state level, district level, etc. And if you don't do that, if you have a, for example, I'm not a believer that any company should have an India strategy. Indian companies, you should have a strategy for each state. For example, people say, okay, South India, right? I mean, it's very important to understand that, even within South India, there are 5 languages. So I'm from Kerala. I actually understand Tamil, but I don't understand the other 2 languages. And culturally, South India is not one market. It's actually 5 different markets. And if you want to be there, for example, you need to be in 5 different television channels, right? So I think a lot of these nuances, which maybe in MNC, some of them implemented well. But I think the linkages to the parent increased in the last decade, and a lot of projects they have done, etc. They have their reasons or rationale for it. Plus the fact that the Indian companies executed better, and I really don't think that's really changing, because there's no evidence at least to say it's changing actually.
Okay, that's super interesting. Mr. Rajiv Shukla is asking, FMCG sector has not delivered good returns in last 5-10 years. Okay, what is likely to be scenario in next 4-5 years? Of course, we can't comment on returns, but in terms of earning growth, I mean, if you can just throw some light on this.
I would say nuance that question a bit actually. If you actually look at the last decade, FMCG companies have delivered significant returns. Maybe there are 1 or 2 companies right. And largely most of that has come through multiple expansion. Let's say PE multiples when I started my career used to be 12 and 15. Today that's like 40 and 50, right? I mean, so you can actually say that 60% of the returns has actually come from actually multiple expansion only, right? Now in that context, when I look at the next, let's say 3 to 5 years, now the higher US bond yield of, let's say 1 to 5%, right, essentially would mean the cost of capital is higher. When cost of capital is higher, valuation needs to compress. That's the textbook explanation, which means, you can assume what will likely happen to the exit multiples 3 or 5 years hence, right? Very low probability that it can expand. It probably is the other way around actually. Having said that, we are very bullish on the earnings growth in general, because as I said, right, so there is formalization, consolidation, everything happening in unison. And if the worldview is that in the next 12 months, if we are to assume that commodities remain where it is, or if there is any softness, that percolation effect will drive volume growth. And volume growth essentially would mean earnings growth also. So I don't think there is any change in our view about companies' ability to deliver double-digit earnings growth. But I think what you need to focus, see, ultimately, what is the stock price? It's earnings multiplied by a narrative, or earnings multiplied by any multiple. You may say price to sales or price to book, or not price to book, EBITDA multiple, or PE multiple, etc. Right? So whatever that multiple is, the possibility of that sustaining is low, given that cost of capital is high.
Okay. Mr. Kamlakant is asking, with all the low base effect gone, the real growth is emerging at lower levels. Plus, there is a risk of El Nino in this year. How do you see these factors impacting?
See, La Nina is a worry. I don't think there's any 2 ways about it. But having said that, I'm a firm believer in causality and correlation. So when we ran, a correlation of, let's say, La Nina years with FMG growth, we're really not getting anything actually. Or let's say, there is a general perception that, good monsoons are good for FMCG, for example, right? Now, I remember doing this about 10, 12 years back, this correlation. So let's, for example, having said that, how do you define a good monsoon, right? Because monsoons is like either 95% or 105%. Now, if it's a good monsoon, it's fair to say that the agriculture GDP growth should reflect that. So what we did was we correlated agri GDP growth, let's say, with Hindustan Unilever's volume growth. Why HUL volume growth? For the reason which I explained earlier, it's a large company and it has got multiple categories, and it is as rural as it can get of any Indian consumption company, right? So if you run when we ran the agri GDP growth with HUL's volume growth over the last 30 years, or rather now it's 40 years actually, at that time it was 30, it was from 1980 to 2010, we actually get an outcome of 0.3, which is low correlation. So having said that, there is a sentiment angle comes in. If it's good monsoons, the farmer feels better. So you can obviously, but statistically I cannot prove it. But having said that, as I said, right, so La Nina is a worry, but statistically it may not be.
Okay. Mr. Dinesh is asking, how do you see use of solar energy producing companies and their ancillary companies to grow in India in next 5 years as compared to the last 5 years? Also, how will the consumers' behavior of their consumptions of solar power will change?
Amit, honestly, that's really not my domain yet.
Absolutely. Yeah, absolutely. But still, to respect to the participant, I have read that question. Mr. Santosh is asking, sorry if it's a very basic question, but why big retail and CP companies enjoy a price earning PE of 50 to 100 vis-a-vis big IT companies, although high growth and dollar earnings, which have a PE of around 25 to 30? Which way would CPR companies PE go in the long run?
So I'll not comment about the second aspect, but I can explain why why certain equilibrium exists. Okay, so it's like this. First of all, there is a premium for B2C, business to consumer, versus B2B. Now, I'm not sitting on judgment what is right or what is wrong, but as a global template, B2B actually gets lower multiple for some reason. So maybe because it is opaque, maybe because the predictability factor is low, etc. It's not that I agree or disagree, as I said, right? So there are multiple reasons for it. Now, the other angle is, let's say, the risk of technology or risk of disruption. Correct. Now, the point to appreciate is, in grocery retail, or in FMCG in general, the risk of disruption at a product level is actually low. Think of it, right? I mean, so all of us has been using the same soap bar forever. So soap as a category, nothing has happened actually. Yeah, sometimes I wonder actually, of course, you may have moved from a soap to a body wash, etc. But the assumption there is that, let's say, if Hindustan Unilever is selling a Lux soap today, tomorrow, if all of us, the penetration of body wash in India is like 2%. Okay, now let's say if that number becomes 50%, assumption is that you will move to a, from a format of bar to a, Lux body wash is assumption. The point I'm saying is that the tech disruption or any disruption in general is far lower in these businesses. And second point is that these businesses are far more closer to the domestic economy, which means investors believe that they understand this business more than the other business. I'm not saying investors don't understand the tech business, IT, which is TCS or info. I'm not saying they understand, but because these are domestic businesses, the belief is that, okay, it is far more. And the last is, again, I'm talking about the consumption part of the companies. The quality of talent here, again, I'm not saying, the quality of talent in IT is good or bad, etc. I'm not talking any of that, right? Let's say perception is that, the consumer goods industry attracts the best-in-class talent, etc. So I think that's largely the, otherwise, I agree with you. If you actually ask me, when we do a reverse discounted cash flow, trying to, let's say, decode what the market multiples tells us, rather than saying what should be the multiple, etc. The required rate of growth to justify the current valuation for many of these consumer companies is very, very high actually. But it is just that the consensus of market believes that these businesses are predictable. These businesses are true compounding businesses and also defensible.
Okay, next question is from Mr. Mihir. I believe this question is for me. If someone wants to invest in a consumption theme, is it possible into the mutual funds? So answer is yes. And which is a valid schemes. Is there any ETF? So ETF is not available as of now. Index funds are also not available in this space. In active category, we have GenNext fund, which is managed by Mr. Chanchal Khandelwal. In 2005, this scheme got launched, and from date of inception, if you have seen, I think it has been doubled investors' money in every 4.5 years. To simplify, if someone 1 lakh rupees invested, okay, till now the valuation could be nearby around 15 lakh rupees, and that's around 16.23% kind of CAGR. This is a very well diversified fund, which is a composition of large cap, which is in the range of around 60-65%, followed by mid cap, which is around 15-20%, and 5 to 10% is the small cap. And it's a very diversified, around 14 sectors are there. So thanks for asking this. Mr. Shukla ji is asking, what is the future with reference to share market of newly upcoming FMCG companies, whether they have chance to become future leaders?
Well, that's a tough one actually. Depends on which company, right? So look, generalized, we touched upon D2C, the direct to consumer companies, etc. Yes, we are of the opinion, just to reiterating what we said earlier, given that there is democratization of marketing insights, opportunity to create niche companies is very high. The question is, look, by definition, niche is small, right? Niche is not mass. So the question is, what happens after you get to a certain market share in that niche category? possibly you'll have to sell to a larger company to make it larger, right? I mean, but yes, so the limited point as far as we are concerned is that given the distribution ecosystem changes, etc. Let's say, for example, if you have an idea, you formulate the product and Amazon will come and pick it up from your home. You don't have to do anything. You have to just produce a product. You have to figure out, and there are contract manufacturers who will produce for you. You just need an idea. You can actually, you just need a formulation, basically. If you have a formulation, if you have a bill of material, you will find someone manufacturing it for you, delivering it to you at your home, and Amazon will pick it up and deliver end to end. You just need to sit at home. You just need an idea and some money. And that too not much. The question is, how will you ramp up? Right, that's what I observe with a lot of these D2C companies. So that's probably answer to your question. So I think, look, these are things which are very long-term trends. Maybe there is a short break at this point because of what happened in US, etc. But these trends never really go away. These are decadal trends, actually.
Mr. Bimal is asking that down trading could also be because of the smaller pack sizes offer the product at a lower per unit values. Consumers are becoming much more aware of these trends and purchasing smartly. What's your view on this?
Possible, yeah. I mean, I've heard this thesis for a very long period of time. But I'm still, but I don't have anything statistically significant to back this argument that buying a small size pack in India is more attractive from a price per gram point of view. And I've seen YouTube videos and all. I really don't think that's the case, because the reason being that this equilibrium has existed for 20 years, right? So it's not like something. So then the question is, why is it suddenly happening in 2022 versus, let's say, not happening in 2005, right? I mean, so I don't think we have an answer for that. The point to appreciate here is that the small packs give higher value is essentially to drive penetration growth. It is also a function of the fact that, obviously India is still a poor country, right? I mean, so there is an affordability angle there, right? And actually speaking, when you think about the $2,000 per capita, actually, I really don't think there's anybody at 2,000, right? Either you're at 800 or you're at 10,000, right? So that's just an average number, right? I mean, from a, bell curve distribution point of view, right? I mean, so anyway, so the point here is, we are still of the opinion that the faster growth in the lower unit packs is basically because of consumers moving down from, let's say, as I said, right, surf large pack to a 10 rupee pack, etc. And of course, the another point to always appreciate in many of these situations is, what we get to see. Let's say HUL says I'm growing volumes at 5%, or a Marico says I'm growing my parachute volumes at like 6%. Because many of these numbers, what we get to see is a net number, not a gross number. But let's take the case of parachute, right? Now, there are consumers who are dropping off the coconut oil category and using conditioner, because oil is also conditioning, right? End of the day, what is an oil? Oil is conditioning, correct? Now, if your consumer is, let's say, moved to a Dove conditioner, any of those conditioning products, so what I get to see in a Marico is actually the parachute, actually not Marico in general. Let's say 6% volume growth essentially would mean that gross, you would have grown at, let's say, 7. Then you would have dropped, let's say, 1%. I'm just hypothetically selling a number. It's not that they're losing 1% every year. They would have lost, let's say, a small percentage to another form of consumption. But at the same time, you're also recruiting consumers, right, from informal to formal. So, for example, today in the coconut oil category, they've got a 60% market share, and organized industry 60% of the total, which means they've got a 36% market share in all of coconut oil consumption, used for obviously oiling purposes, not edible oil. So think about it, right? That 36 can be 40 and 50, right? So it's still headroom to grow. So anyway, so the context of just to answering your question from a template point of view, what we get to see is the net number. So, and I have nothing statistically significant which I'm aware of to kind of, let's say, for both of us have to the same view that consumers have become more smarter than what it was, let's say 5 or 10 years back.
Okay, we can take last two questions. Mr. Shuklaji is asking, future of food delivery startups in India.
It's for real. It's for real. No, of course. We cover Zomato as a house. My colleague, Abhishek Banerjee, covers Zomato. So we are of the opinion that some of these habit changes which has actually happened, right? Adoption, of the food delivery is material actually. And these habit changes are for real. It's a different matter that what is the pricing power. It's a different matter that how much the consumer is willing to pay, let's say, for a delivery versus convenience, etc. Obviously, all those will go through its own sets of cycles, right? Let's say the thesis, which, or rather, there was a question earlier: what happens to US, and can that have an impact on Indian consumption economy? Of course, kind of, there will be, let's say, let's say US bank cuts tech spending. That spillover actually can have some impact on a lot of consumption aspects. Because, for example, I may have the willingness to pay 50 rupees for every delivery, but I may not have the ability to do so. First of all, I need a job to earn first, right? I think the context is these businesses are for real. I really don't think there's any, and also the point to appreciate here in India is that India is a country with like, few million, such hotels, etc., which actually needs this ecosystem to get that, incremental nth revenue. What I'm saying is that every hotel doesn't really have the delivery fleet. Correct. So they need it actually. There's a necessity here. And also at one level, this is also formalization. Because you buy anything through Swiggy, Zomato or any such aggregator, as a matter of fact, whatever you do is actually in the formal economy. I hope I'm clear about it, right? Versus other ways of conducting business. And typically anything which drives formalization, better tax collection, etc., typically it gets encouraged over a period of time.
Okay, thanks. And we'll take the last one. You mentioned that, I think all these FMCG companies or most of the companies which are related to the consumption, they're focusing on the middle class or the affluent class category. So any plans you foresee precisely for, extremely lower middle class or the bottom of the pyramid? Any strategy from this player?
See, what we're essentially saying is that, it's not that the companies don't have mass market products meant for the mass market. I'm only saying that, I'm not finding companies incrementally putting, let's say, marketing dollars to, let's say, drive faster growth in some of these categories. Yes, that's all I'm trying to say. All the actions of, at least the large listed players and plus some of the unlisted players, etc., everyone really wants to premiumize. So premiumization is a buzzword. I'm not saying don't do premiumization, but the example which I gave you, right? I mean, kind of, let's say Wheel as a brand got created in the 80s. So where is the next Wheel in any category? That's just an example of one category. Right? Think of it, right? Or where is the next Apology? Maybe there's an opportunity because there is already Apology, right? So obviously, just think of it, right? Different categories, doesn't really have a mass market brand, and that I do believe it's a white space available there. See, companies have got their own reasons, saying that, look, for example, in the last decade, most of the companies have expanded their operating margin, give or take, like 800 to 1,000 pips. Again, in HUL, for example, which used to have a 15% operating margin 10 years back, today that's 25, broadly speaking. Right now, when your margin threshold is high, your ability to operate in the mass market actually reduces.
I think overall session is too good. I mean, so many comments are flowing. Thank you so much for this nice session, Manoj sir. I think in a very lucid manner you have explained a couple of emails. So thank you so much, Manoj, for being a part of this event. Thank you so much for addressing everyone on this important topic. And thanks all the participants for joining today. And thanks for assisting us to have this 11 sessions of Niveshakon Se Samvaad. So thanking you once again and have a great weekend.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।